GM. Welcome to the 2024 trading plan. So in this video, I'm going to go over my personal trading plan. First thing to say obviously means this does not have to be your trading plan. You should have your own plan, but you can use my one as inspiration. I would, if I was going to steal from this, if I were you, I would steal the structure. Right? What are the key things that Michael thinks is important? Not what I think about the market, but what way is Michael planning to set up his portfolio, his trading, his approach, his views for the start of the year and all that. That's more important. Don't focus on what I think is bullish or bearish. That's more of a predictions thing. Focus more on how does a trader set themselves up for the year. Okay? And especially this year specifically, because in crypto we have a key difference. And the key difference is that we have an extremely cyclical market. And the market is cyclical to the point of being almost predictable. I say almost because nothing is truly predictable. However, in the stock market, in commodities, in the bond market, bull and bear are not defined. The stock market has been in a bull since 2008, pretty much uninterrupted, until 2021. The bond market fluctuates up and down. The forex market, same thing. The commodities markets go boom and bust over, random time frames. But crypto has followed a very, very predictable 4-year path ever since Bitcoin's inception. Will that hold? Will that stay? It doesn't really matter, because the only way to approach it is year by year. And I think this is where TradFi people lose in crypto and why they're going to still underperform the crypto natives. They are taking their ideas into a market that is not theirs and trying to impose them, their valuation metrics and their ideas of what way the cycle should go. When in reality, the crypto natives, for now and probably for the next few years, even still, will outperform the TradFi. So use that to your advantage. And we all can use that to our advantage. And that's how I'm going to approach it in 2024. What that means is you have to have a lot more conviction in crypto. And you have to believe in something until it's invalidated. If you're buying stocks or whatever, you can buy stocks and say, I'm holding this as long as earnings are good. Okay. Or I'm buying the dip because it's stock market just goes up only. Okay. That's really more of an investment approach. So in the stock market, you have investors who just invest forever, basically, because why wouldn't you? Look back at the last 100 years, it just keeps going up. And then if you have traders, they trade very specific events. They usually trade around earnings. Okay, so they're actually targeting a very specific time frame to trade whatever stock it is. Crypto's not about that at all. Crypto's all about attention and future promises, which we'll talk a little bit more about in the plan. So let's get into it. First of all, I'm going to do a critical review of my last year. Everybody should do this. You must review yourself so that you can find problems and then offer solutions for going forward. And it's a critical review. This is only the stuff that I didn't do well. There's lots of stuff I did well, but that's not worth putting into the plan. Or at least if it is, you just put a note down and say, yes, do more of this, keep doing this. But what you should really focus on are where were the areas that you lacked, or where you could have optimized or improved or done better, and bring them forward. So, my review of last year, my 2023 predictions were my most accurate ever. And I made money, but I did not maximize these opportunities. So I left money on the table. And that's never good. That's always something you want to avoid, because the opportunity in the market is very difficult to capture. People really underplay how difficult the markets really are. Anybody can buy and hold long enough and it'll go up and they'll be in profit on paper, but it's not that. The market is about getting in and getting out, and then getting in at a decent price and getting out at a better price, So you have a low and a high. You can buy low and sell high, right? But that's just vague. You can buy Bitcoin and just wait and it goes up. Okay. But where did you enter? Where did you exit? Why did you enter? Why did you exit? What was the reasoning? What was the plan? And how much of that move did you capture? These are all the things that determine whether you're going to outperform. And I don't know about you, but I'm not just here to tag along. I'm here to outperform the market. So the solution to that is to keep my trading focus narrow. Stick to core themes and narratives. Less is more. It's a big theme that will run through this 2024 plan. Reason being is that I had many different ideas for what would happen in 2023, and most of them played out. But to actually trade them all was not really feasible for how I trade. I am not someone who's going to buy 10 coins and hold them. That just doesn't work. I believe it doesn't work for anyone, but it certainly doesn't work for me. And so it meant that I had to make choices, right? Where do I allocate my money? And of course, if you make a bunch of predictions or a bunch of plans, and then you allocate your money into not all of them, you allocate your money into a few of them, then inevitably some of the ones that you avoided are going to do well. And so you can cure that by focusing much narrower, which is developing your plans for the year and then drilling down to what really matters and then hyper-focusing on that. It's much better to pick, if you have 10 sectors, AI, gaming, layer ones, layer twos, etc., etc. So if you have 10 different sectors and you're like, I think this one does well here and this one does well here and here's a good coin for that. Okay, cool. But then remember that as you go through the year, you're going to have to trade this. You're going to have to watch the charts. You're going to have to buy and sell. And you're going to have to do that at specific times. Meaning, if you're putting money into AI, you want to buy a cash, for example, and the plan is to hold that for several months, that money is tied up. So that cannot be used elsewhere. So therefore, you must get better at timing because you want to minimize the opportunity cost. Every dollar that's in a coin is a dollar that can't be used elsewhere. And so you want to have more focus on those fewer number of coins so that you can time them better and you're not having to try and flick through 20 coins every day trying to find an entry. You've got a narrower focus. And if you do this, just this one thing, definitely help me. If you do this narrower focus, you'll find you get better entries because you have more attention on something. And the more attention you put on something, obviously, the more market knowledge you're going to have on it. And if it helps, I always think there's somebody out there who's trading against me that only focuses on this. Again, this is why TradFi people underperform, typically, in crypto. Because they are tourists, right? They fucked off for the last 2 years and they just traded stocks. They traded Forex. They traded commodities. All the big banks and institutions on Wall Street, they all have crypto traders and crypto desks and that, but they really deserted the market. The reason we had such low liquidity in 2022 was because all the big money left. So the big money now comes back in, but their attention is split. They're still managing a book of trades for TradFi. They're still trying to trade the indices. They're trying to trade bonds. They're trying to trade Forex, whatever. And now they're trying to latch on to crypto because, oh, bull market's coming. Big upside. They're going to get outperformed by somebody whose focus is purely on this industry and has been for the last 2 years while they fucked off. That is me. That is you. And it's important at the start of the year to remind yourself of that. This is my industry. This is my sector. This is what I focus on. Therefore, it must be maximum focus on outperforming in that environment. Second review, was this a breakdown of my trades for the year? So I shorted 35% of my trades pre-October. So this is my trading. This was my portfolio outside of Bitcoin, which is slightly different to what my portfolio is now, right? But just to keep it simple, for the first 3 quarters of the year, I was long about 65% of the time. I was short about 35% of the time. If you remember my 2023 predictions and my 2023 review, which I did a few days ago, you'll know that my view on the market was bullish all year. The only time where I wavered from that was in August, September, when I wasn't bearish, but I just thought Bitcoin wouldn't make a new high for the year. But I wasn't in any way bearish. I hope it goes lower so I can buy more. So I maintained a bullish bias the entire year because that's my fundamental belief. Like I said at the start of the year, the bottom's in, we're going to an early bull. And yet, when I reviewed my trades at the end of the year, I shorted 35% of the time. Now, there were many valid shorts. I made money on some, I lost money on others. Looking at the review, I was basically flat on my short trades. So I didn't win, I didn't lose. Then I shorted 0% of trades post-October. So from the last short trade I took was shorting the fake news pump in October, which was like a scalp short, shorted it down, closed it, made some money. And from there, didn't short again on any of the systems that I run, any significant trades. Closed a hedge short. I was hedging some of my Bitcoin holdings, which is a separate trade, and closed that just before the big breakout, which came after the 35k breakout. And from there, long only. And guess what? I outperformed. And not just outperformed as in outperformed the market. I made money because obviously everything went up. Everyone who was holding crypto made money. How could you not? But I outperformed Bitcoin, which is the benchmark. And so my solution to this, or my takeaway, is not that, you might look at this and say, yeah, but look, you didn't lose any money. You're flat. It doesn't matter. But you have limited mental energy, limited attention. And so, no portfolio shorting in 2024. I want to be long or in cash. It is one less thing to think about. This is so much more important. I now don't have to think about swing shorting with my portfolio or hedging my bags or any of this nonsense. Because if I'm truly bearish, I'll go to cash. And as you'll see when we go on, that's for the portfolio. So I do have a smaller portion which is trading, and trading can still include shorts if it's following your systems. It's very important to differentiate between trading and your portfolio. Because even though in reality it is all a trade, you enter and exit for the same reasons, but just the portfolio, you're holding it because it's a bull market. And if you're in a bull market, the most important thing is to be exposed to the bull market, which means holding as few dollars as possible when the time is right and letting the market rise. That's the part where you do not want to go into shorts. Third review, I traded less this year and I used work as an excuse. I missed some valid opportunities as a result. So trading less is not a bad thing for me because typically I can trade extremely frequently. I could trade multiple times a day. And with all the things going on in my life, including the real world, as well as my personal life and my trading, that does not suit my lifestyle. Full-time day trading does not work for me. And so I've known this for ages. And I did a lot less trading in 2023. Ended up making a lot more money, of course, towards the end of the year. But missing valid opportunities is still something that I don't like to do. And it's not so much that I traded less. It's more the excuse that I would give myself. Oh, I'm super busy with the real world. Oh, I'm traveling or whatever like that. Those typical excuses, right? And neither of those are acceptable. So my solution is to improve my workflow systems, which you can see in another lesson I've done, which is the bull market workflow, and prioritize time management. This is really important for me. Because even as a day trader, you can day trade, and I can, and I do this, and this is part of my plan, 2 hours a day. You just have to trade specific hours and then leave it. And you have to have a plan that's back tested and stress tested for that time frame and know what you're doing, most importantly. What you can't do is run systems that require you to be on the screen 12 hours a day. Right? So if you have a generic system that could give you signals at any time, then you either have to trade every hour of the day to maximize that system, or you will minimize your results. And That's not good. That doesn't work for me. Can't do that between running the real world, running stuff in my personal life, and trading and researching and just being involved in the bull market itself. But I definitely can trade more of my scenario-based systems, like my daily open strategy or some New York open strategies or the European, any of those specific time frame ones. They can be ran. And to not do those, in my opinion, for me, being very critical, is a combination of complacency or laziness, whatever you want to call it, or just outright not having my time management on point. And it's more so that. I know I'm not a lazy person, but if you don't have your time management and your systems on point, you can miss opportunity. And missing opportunities, especially in a bull market, is really not acceptable. Fourth and final one, I completed my journal on 90% of days. So the vast majority of the year, I did my morning and night journal, but not every single day. And I don't like that. It should be 100% every single day. And of course I blame travel. There was times where I was traveling and literally didn't look at the market at all. There was days where I took no trades. There was many days where I took no trades and I didn't complete it. But none of those are an excuse. So my solution, don't be a bitch. Journal every single day. Journaling is not about, did I trade today? Even if you didn't trade, your journal should be, journal, I didn't trade today. Here's what happened in the market. Bitcoin went up, this went down, Fed meeting, whatever. Just write some things and then do it. It's the habit of doing it every single day, like brushing your teeth. And that must be the case. Because otherwise, what are you striving for? If you don't strive for 100%, what's the point? Now, every year I have a focus. And I've decided this year to just put it into one mantra, and that's tunnel vision. So for me, having been through bull markets and bear, the bear market is so much less stress. It's so low stress. Most people think bear markets are bad because their portfolio is getting wrecked and their net worth is decreasing. But bear markets, you have all the time in the world. You are not overloaded with information. There's not new coins going fucking 5x every day. You're not bombarded by nonsense, scammers, fucking idiots online trying to shill stuff. In a bull market you are. All of this, for all the good we get, which is our bags going to the moon, we get all the bad. We get bombarded with scam projects, new announcements every day, new exchange listings, new projects popping up left, right and centre, new narratives, influencers, arguments, this, that, which is better, which is worse. If there's one thing you want to focus on this year, it's drowning out the noise. Tunnel vision. Focus on what you can control, which is basically set your plan, execute on your plan, and check back in and remind yourself what you're actually doing. Regular reviews, regular check-ins, keeping yourself accountable. So, 2024 plan for the market overview. So this is my view of the market as we stand in January 2024. This is not predictions. Predictions is in a different video. But it's, sort of semi-predictions. Because you kind of have to look at the market and say, this is what I think's happening. At least this is how I'm going to approach it. And very important as well, if you're watching this in fucking February, March, April, May, June, this will change, right? This is what my plan is at the start of the year. But just like anything, just like any trade, as new information comes in, your approach must change. But it's very important to have this plan because there's going to be a lot of bullshit information that comes in that tries to make you deviate from your plan. And that's when you can then refer back and say, wait a minute, I said this in January. Now this news article or whatever is telling me that, which is true. Is my idea still valid? Is this new article just nonsense? Are these people online talking shit? And then you can come to a rational decision and say, okay, do I need to update my own worldview that I had at the start of the year? Or is my worldview still accurate? So market overview. First thing, we're in a bull market. Ignore all noise that says otherwise. Self-explanatory. 2024 is not a profit-taking year. So this is one of the ones that's subject to change. But if you can only play off of what we've done previously, we are going to go to the cycle peak in 2025 or even later. That is the historical trend, and we actually have a trend in crypto of lengthening cycles, not shortening, lengthening cycles. And so by that logic, 2024 is not the year to be taking profit. Ask anyone who took profit in 2020 how difficult it was to get back in 2021 when all of the gains came. Because you might think it's a good idea to take profit. Oh, Bitcoin goes to all-time high, or this coin goes to there, and you take your profits. Okay, but then you've anchored the price in your head. It's so difficult when you've ridden your investment up to a certain level. Then you take profit. Then it goes way beyond that. It's extremely difficult to get in. This doesn't mean never take profit. And like I said, this one's open subject to change, which we'll talk about in a second. But as I start in 2024, January, 2024 is not a profit-taking year. And that's talking about the cycle bags, the long-term spot holdings. Right? Again, remember, I'm a trader and I hold stuff long-term. The trading is always trading. Trading is always about taking profit. What I'm talking about here is cycle bags, Bitcoin, long-term altcoin holdings. Okay, so remember to understand that. Next one. Macro is bullshit this year. So we've had 2 years where everyone's got themselves hyper-focused on macro. Inflation this, recession that. What's the Fed do? Interest rates, right? The more focus and attention is put on something, the less it will have a market impact. You've already seen this in late 2023. Don't ignore your own eyes. People can tell you that this move it's just the ETF hype, it's just a fake move. Oh, the stock market going to all-time high, that's just a bear trap. Oh, it's a complacency. No. There's been a very real shift. And whatever the macro doomers who told you at the start of 2023 that we're going into 100% recession, well, now they're going to jerk off to whatever the next macro narrative is. And they try and sound smart by trying to predict the future based on, well, if you look at the jobs market, I know it says this, but it actually means that. And they say that inflation's coming down, but if you take this and that and do... Have fun staying poor. Macro is bullshit. Macro is bullshit all the time in terms of predictions, right? In terms of actually trading. Macro is basically what you think is going to happen in the world at large, and it's usually set over multi-year or decade timeframes. That is not something that's very, very often, it's not tradable. If you think there's going to be a recession, how do you even express that? It doesn't just mean short anything. Right? And if you're a macro view, there's going to be a war. Okay, what do? A lot of people would have sold Bitcoin last year because of war. War? Yeah, that's bad. Risk assets down. Oh, guess what? Bitcoin rips because now it's a store of value. So, you know, these strongly held beliefs people have about what should happen in these macro conditions, it's all based on the past. Yield curve inversion, that's 100% recession. Well, it's actually not. And we're still not in one. And the number one thing that they're all missing is global liquidity. You hear Adam talk about this a lot. This is the whole market. Liquidity is money. The more money that there is floating around in the world, the more of it that will apportion itself to crypto. It's fucking simple. If you have $1 million for every single person in the world, and they all have to choose where to put it, and they all choose 50% stocks, 40% bonds, 10% crypto, right? Just random. And then you give them another $1 million, and they keep the same percentages. Guess what? Crypto will go up. That's what's happening. More liquidity, it means everything rises. And so, that's why macro's bullshit. That's why the recessionistas were wrong. Idiots. That's why all these doomers are wrong again and again and again. Because the liquidity cycle is firmly inflecting upwards, and it's at the lows, it's not at a peak, and it's heading upwards. So, unless that changes, which can happen, the direction is going to be up and to the right. Do not overcomplicate it. So that's my macro piece out of the way. Bitcoin will outperform ETH until all-time high. I think anybody who says this time is different, that's one of the most dangerous phrases you can ever take in markets. And I could extend this to and say Bitcoin will outperform ETH and alts until all-time high. But it's not strictly true, because even though Bitcoin dominance keeps going up, it doesn't mean that certain altcoins won't go up more, because it's very easy for an altcoin to go up 50% or 100% because they're low liquidity. They're far lower in market cap, takes less volume and liquidity to move them, less buying pressure, right? So yeah, even though Bitcoin dominance is on a one-way run up, Solana's outperformed Bitcoin. That's because the rest of the market in total has underperformed Bitcoin. But I think you understand that. So focusing just on Bitcoin and ETH, the two biggest, they're our macro, right? If you look in crypto, the macro assets, the majors, is Bitcoin and ETH. They're the two that have institutional interest outside of our crypto sphere. And I think the big money, just keep it very simple. The first trade in every market cycle is Bitcoin, because Bitcoin is the one that leads us out of the bear market and into the bull. And the game is always, and this is for every single person, this goes for me, this goes for you, this goes for a whale, this goes for a TradFi native, this goes for BlackRock, fucking everyone. The game is buy Bitcoin below all-time high. Target, all-time high. And not just all-time high, the target is usually well above that. Bitcoin outperformed Ethereum in 2021 until it went to 42k, which is double the previous all-time high. All-time high of 2017 was 20k. Bitcoin went on a run, smashing ETH and the whole market until it hit 42, and then it sold off. And even though Bitcoin went higher, that's when the alts really started to run. I don't know if that's going to be the case. I don't know if Bitcoin's going to go to 70 and then go to 140. I'm not going to say that. I'm saying that until all-time high, the very basic logic is Bitcoin, target, all-time high. That's what everyone's going to do. That creates a collective consciousness that does not want to sell Bitcoin below the all-time high. If you want Ethereum to outperform, or the altcoin market as a whole to outperform, you need people to sell their Bitcoin. They have to sell that, realize those profits, and move them into other coins. If people do not want to sell Bitcoin before all-time high, Bitcoin will continue to beat ETH until then. It doesn't mean ETH can't play catch-up. Right? It doesn't mean ETH can't go to 3k, 4k, whatever. But until Bitcoin actually breaks its all-time high, it's king. Never forget that. Bitcoin is king. Now, this is something that's important to remember too, because I love Bitcoin. I'm a Bitcoin maxi. But you have to temporarily divorce yourself from Bitcoin in a bull market if you want to maximize returns. I know it's heresy. I know it's blasphemy. I know it's haram, whatever you want to call it. But you have to do it. Because at a certain point, Bitcoin will just not go up as much as alts. And that's always been the way, and that's always the way it will be. Because that's the way of every market. In every market, human nature is to just chase things down and go for higher beta and chase down into narratives. And then the wealth effect as well. It's not whether you want it to. It's not about how much you love Bitcoin. It's the fact that if Bitcoin goes to 150k, guess what? A lot of people are going to take profit and they're going to chase into stuff that hasn't pumped. That's just how it works. So you can either sit and rigidly hold Bitcoin and underperform, or you can move. Now, I will never sell all my Bitcoin, never. And this isn't even really a 2024 thing, so I won't stay on it too long. I don't think we go to all-time high. I do think we can go to all-time high in 2024, right? Whether it's a prediction, I don't care. But I don't think Bitcoin's going to have its peak in 2024. I don't think that. So this is more just an approach to remember in 2024 that if we're below all-time high, Bitcoin's king. Yeah? Next one. Because I'm very bullish, I want to put in the counter. 2024 might underperform expectations. If so, use the opportunity to buy more. So, everyone's bullish. Bull market, halving year, all of that. But you have to remember that the market goes on the short term off of positioning. So if everybody's long, it will not go up. If everybody's long and there's nobody new coming in, it will go down. Because there's just an imbalance of supply and demand. Then it will go down to a point at which there's no longer an imbalance, to where there's more demand, right? And the people who are bullish are starting to panic and sell, or getting bored or impatient or whatever. So if that happens, use the opportunity to buy more. Underperformance, on the same point. Underperformance, one of the things I can see is suppressing prices as an accumulation year for institutions. This is very real. This is done across all markets. The big players, Wall Street, they're in the game now. You want the institutions, you have to get the institutions' games. Now, I don't think this is going to happen to the same extent, because this is what we had in 2023. If you remember, we topped in April. We didn't break out till October. That was 7 months of sideways. That was suppression. That was Bitcoin being held with a very, very rigid buy and sell wall between 25 and 31. That was a massive accumulation range by big players who needed to get their bags filled before the inevitable ETF, hype, halving, boom, away we go. So I think that's happened, but that doesn't mean it can't happen again. Because a lot of these, and I'm not talking about Bitcoin here, this is more about altcoins. If these institutions have now said, holy shit, crypto's back, and it's not just back, it's back more than we ever thought it would be, we need in. Then you could see a scenario where altcoins especially underperform for quite a bit of the year as these other players fill their bags. So what does that mean for us? Back to the point before. Use the opportunity to buy more. Below all-time high, everything is a trap. It's a trap for bears. Do not get bored out of your positions this year. That's the main point. Do not get bored out of your positions. If something doesn't move and your thesis is still valid, right? If it doesn't move, or if it's down and it's going sideways, but you're still valid, time-based capitulation, something going sideways for 8 weeks, 12 weeks, 16 weeks, that can shake people out by just pure boredom. And what do? They sell it, they go away, they do something else, they come back, boom, it pumps. Don't do it. So be prepared for that. Be prepared for a massive golden bull. Be prepared for underperformance. Next. Cash is the biggest risk when we're below all-time high. I think this is really, really important. Cash is a risky hold. Cash is not risk-free. Anything that is conventional wisdom is wrong in markets. Conventional wisdom in markets does not yield profitable results. Because if it's conventional wisdom, that means the masses, the crowd, the sheep, they all know it. If everyone knows something, it cannot, by definition, have edge. If it cannot have edge, you cannot make money off it long term. So if 90% of people think that cash is safe, right? Because what do you do when you're scared in the market? What do you do when there's a panic? You go into cash. Yeah? No one ever went broke taking profits. Go into cash. It's okay. If you actually go back and test the periods throughout history, and you use the stock market because we have more data for that, at all the times where it actually paid you to be in cash, it is a fraction, I'm talking 1% of the time, where it was beneficial to be in cash. Because if there is a bear market, it usually, from top to bottom, it's usually quite rapid. And then even if we go sideways or don't go up again for a while, you still want to be in right away at the bottom in stocks. Or in our case, crypto. And being in cash is, you are at max risk because you're in a negative yielding asset, meaning cash returns you nothing and it inflates. And you get materially more poor every year you hold cash. Just ask anyone who bought their house for 50 grand 50 years ago, that's now worth $1 million, what would they have done if they held 50 grand? If they didn't buy a house 50 years ago, like, no, I'm going to save this 50k. I'm going to save it for a rainy day. Well, good luck buying a house now when it's gone 20x. So, cash is a risk. Burn that into your brain. You must put your cash to use. It must be productive. So even if you're feeling bearish, or even if you think there's a bull market over, your cash must move somewhere. That's why everyone's putting it into money market funds to earn 5% or 6%. At least then you're doing something productive with it. If you want to take it out and put it into your business because you're going to grow your business, you're going to expand it, you're going to make more money on the end of it, good. You're going to put it into Facebook ads for your e-com store. Good. Cash must be used. And so the only exception to this is if you're a trader and you're mid-trend and you want to stack some on the side to buy lower because you're expecting a correction and you're already in, that's fine. That's being used. You can have it on the side waiting. You can do that. Totally fine. But these people that are sitting completely sidelined right now and have been all year, look at the risk they've had. Look at the opportunity cost. They've missed a 200% move in Bitcoin and everything else up more. And we only get this, again, 1 or 2 years at a time. We get these outsized returns and they've already thrown away pretty much 12 months of it. 12 months since the bottom. Anyone who sat in cash the whole year, sidelined, oh, buy lower, buy lower, buy lower. Well, they've lost a year, a full year of gains, and we don't get infinite numbers of years. And so a lot of people think that because we've gone up all year, that it's too good to be true and we have to pull back. No, you probably get the 1, 2, 2.5 years in a row, right? You get them all at once. Cash is still the biggest risk. Next, everything's a bear trap below all-time high. Just a good frame of mind, a good rule of thumb. Everything, while Bitcoin is below all-time high, is a bear trap. That means the tops are false. Doesn't matter how bearish they look. Doesn't matter how bad the news is. Everyone, I guarantee you, that the biggest money, the smart money, the whales, the OGs, the people who don't panic, the people who have patience, they are accumulating because they know that those supposed bearish highs above us are actually a target. Liquidity matters more than the halving or the ETF. This goes without saying. It goes back to the global liquidity point. Liquidity is all that matters. The halving is good. The ETF is nice. They get the interest. So what they do, it doesn't mean it certainly doesn't mean that the halving and the ETF are of no consequence. But liquidity matters more. Why? Like I said earlier, if you have $1 million across the entire world and everyone has to choose what they put it into, and they go 50% stocks, 40% bonds, 10% crypto, if you then have a big hype around the ETF, you have a hype around the halving, you get a lot of people talking about it, a lot of podcasts, lots of your friends talking, all, the general excitement and positive sentiment around crypto, then the person is more likely to put maybe 20% into crypto and 30% into bonds. Or maybe even go 30% or 40% crypto. They might go more to crypto. That's where the narrative matters. The liquidity, imagine the liquidity. It's one big pool, right? It's one big pool of money all throughout the world. All of the world's wealth, trillions of dollars. Where that goes is based on attention. There has to be attention. You have certain amounts of it that are fixed, right? People who have, I put X amount into this, X amount into that, and that's it. Because they do it automatically. They have a portfolio split, they have an algorithm, they buy ETFs, they buy whatever. But there's always a pool of capital out there that's floating. So if you've got trillions and trillions and trillions of dollars, there's a percentage of that that rotates. And it rotates between whatever is hot. And right now, that's crypto. But it's only just beginning. But that liquidity, so if the liquidity is not increasing, then the halving, the ETF, yeah, they're all good, but if there's not more dollars coming in, you're not going to see outperformance. So liquidity, don't forget that. Next one, AI is the number one narrative outside of Bitcoin. Focus there. This is kind of alluding to my 2024 predictions. But it's just more for me, for my plan, don't forget the main thing. Don't forget the greatest bubble in human history that is brewing at the moment and that we will look back on in 5 years and say, that was the biggest bubble in human history. That was bigger than the internet.com bubble. That was bigger than the railroad bubble. Or whatever fucking insert bubble here. That's the only way that you can view it. Because whether it's right or wrong, that's the highest probability, right? You can say, oh, I like layer 2s, I like layer 1s, I like modular blockchains, I like NFTs, I like DeFi. none of those are as likely to capture normie attention and the whole world and all of people in the entire planet. None of those are as likely to capture the attention and create a bubble as AI is. It's so fucking obvious. Don't fade it. Now, with that, I don't have 100% of my portfolio in a cash or in AI coins. I still hold a lot of Bitcoin. It doesn't mean you put all your money in it. It does mean that you have the majority of your focus towards that sector. How is it brewing? What are the cause and effect relationships that are happening within AI? And most importantly, there's going to be so many times throughout this year and next and beyond, whatever, however long this bubble goes, where people say AI is dead. AI is dead. It's a scam. Blah, blah. People were saying that the internet was a fucking scam from the moment it was created and all the way up. 95, 96, 97, 98, 99. And then suddenly, early 2000, everyone thought it was amazing. That was the top. When people are saying that AI is shit, ChatGPT is dumb, ChatGPT is woke, AI is clunky, AI doesn't work, I can't use AI in my business. Oh, look, AI is not replacing every person like they said it would. Oh, there's no overlords. Oh, look how stupid it is. How is it going to be general intelligence? Disbelief, disbelief, disbelief. The time to exit is when every single person on the planet agrees that AI is the fucking greatest thing ever. And you cannot, if you don't have 100% investment into AI, you are an idiot. Just like metaverse in 2021, when everyone was like, oh my God, if you don't own land in the metaverse, you are missing out. Good luck in your physical existence, you fucking retard, because we're all going to put on our VR headsets and we're all going to live in the sandbox or live in Decentraland or whatever. That kind of idiotic exuberance will come into AI at some point. Because I can fucking guarantee you that AI is far, far sexier as a narrative than metaverse ever was. So, it's just a reminder, do not miss the potential biggest bubble ever. So, and I'll caveat this by saying, of course, I don't know the future. Maybe it's not the biggest bubble ever. But if it is, and you listen to this in 2024, in January, and you miss, and you look back and say, fuck, Michael was right. All the other students were right. Now they're all in Lambos, private jets, flying to their private island. Right? It's like the future you, what would you be more pissed off at? Would you be more pissed off that you knew about AI early when everyone else thought it was a scam? Right? Would you be more pissed off that you knew about it and you did nothing, or that you focused on it, that you actually got involved? What if this is the internet before the internet was the internet? What if this is like finding Apple and Google and Microsoft, or not Microsoft, but Apple, Google, Zoom, Netflix? What if it was like finding that Facebook in 2010, 2011, 2012? What if for once you're actually early to a forming bubble? That's the approach I'm taking with it. And if it's wrong, okay, cool. That's why I don't go 100% of my portfolio in it. Right? But you don't want to be left with the regrets of, oh, I believe this Twitter thread about how the ZK roll-up technology was so important to crypto and I went all in on that. I can fucking guarantee you, no idiot who's in his underwear on his Biden bucks is going to spend his stimmy to buy your fucking ZK bags off you. He probably is going to buy your dog shit AI token that has a lot of hype. Next, there will be at least one major correction this year. Buy it. That's it. Full stop. Nothing more to say. If we go up from here, doesn't matter. If we go down from here and then up, doesn't matter. There will be something at some point this year that is considered a major correction. Now, doesn't mean percentage-wise. Don't get caught up and say it has to go down 60%, 50%, Fibonacci retracement, golden pocket. Don't jerk off to any of that dumb shit. Whenever there is a correction that makes people stop being as bullish as they are now and starts getting bearish, buy it. And I'll touch on in a minute how I intend to buy that with an objective technical view. So the total crypto market cap might go to 3 trillion, but not beyond 2025 for that. So here's something that a lot of people are overlooking. One of the reasons why I don't think we go to broad all-time highs this year and it happens next year, 2025, is because the way TradFi money works, and the TradFi money will eventually come into crypto and the institutions will all arrive and every fucking boomer on the planet will start aping in again to crypto. Okay, that's the base case. But people look at the total market cap of crypto and think that's the total market cap of crypto. No, it's not. People are forgetting the stock market. So it's far more likely in 2024 that the big money, they can buy an ETF, yes, Bitcoin. But if they think there's a crypto bull market, they can't buy Ethereum, they can't buy Solana, they can't ape shitcoins yet. They can on their personal account. With the big money, the rails aren't there yet for them to get in. We need more ETFs, we need ETH, we need whatever else. We need more avenues, we need better regulations. We need the Republicans probably to win the election and to stop fucking absolutely clamping down on everything to do with crypto innovation in the US. So open it up so that these institutions can actually buy crypto. But that's not here yet. That is more likely to come next year. So the total market cap of crypto just deals with our coins, our bags. Historically, it doesn't go to all-time highs in the halving year. It goes maybe at the very end, leading into the next year. So I don't think we go to 3 trillion or beyond it this year, but I do think we can go way beyond it next year. But what you really want to keep an eye on is Coinbase stock, MicroStrategy stock, Mara, Riot, basically any of the miners, and the upcoming IPO for Circle, USDC. It's not announced yet, it's rumored, but they're going to do it, obviously. These are the places, and of course the Bitcoin ETFs themselves. These TradFi areas. Don't forget to factor those in to the total crypto market cap, because they are. Bitcoin miners, MicroStrategy, Coinbase, they are crypto assets. So they should count. So if you're seeing the total growing plus these on top, I would expect that in 2024, those TradFi ones grow first and grow fastest as the TradFi people get allocated into any type of crypto exposure. And then after that, as especially with the risk curve, after we start to go all-time highs across the market, more and more money will flow into crypto itself, especially if we get better regulations and stuff. Next one, if you're not fully allocated spot long when Bitcoin hits all-time high, you've underperformed. So remember, this is me talking to me. This is not advice for you. You can do whatever you want, make your own plan. But for me, if I'm not fully long when Bitcoin hits all-time high, I have not done my job. Right? The job is to be fully long. It doesn't mean Bitcoin long. It means fully spot long, as much as you want to put in. This doesn't mean your entire net worth. You still have to have savings to live off of. You still have to have income, to pay your bills. I'm talking about your investment portfolio, the money that you're putting in, putting at risk to get a return. If it's not fully long by the time we hit all-time high, you're underperforming. Because look where we are now. We're the early ones. We're the ones who sat through a bear market of fucking bullshit. So on the way up, if you're wanting to take profit, or like for me, if I take some profit here, take some profit there, I can't lose sight of the fact that when Bitcoin goes 70k and it ticks over, I should be fully long spot. I should not have to worry about getting in then, because that's when everybody else is going to worry about getting in. I do not want to be in a position where we see those headlines, Bitcoin all-time high, and the whole world starts to FOMO, and I'm not in. That will be, think about it, how bad is it? That will be such bad management of my money. As a fucking trader who literally spends every single day looking at this, that would be so bad that it would be unforgivable. And that's it kind of loops back to 2024 is not a profit-taking year. Unless Bitcoin hits all-time high, right? If it's not a profit-taking year and I don't want to be exposed in cash when we hit all-time highs, then I should be less trigger happy to take profits this year. That's my approach, right? Finally, fundamentals are irrelevant in a bull. I would argue they're always irrelevant, but over time, the things that survive do have to have fundamental use. What matters is attention and promises of future value. So I know this. This one's actually more for you guys. And to remind me, don't get me wrong, and to remind me. Attention, promises of future value. Attention, promises of future value. Attention, Promises of future value. What does this sound like? AI. Do not wrap yourself up into this whole spin about it's a scam, it doesn't mean anything, it's not really got a use case. Attention. Promises of future value. If there's attention on it, literally, the most clickbait headline thing in the business world right now is AI. You write any AI article, you're getting more clicks than if you write an article about solar energy, right? Attention. Guaranteed. Done. Promises of future value? Are you fucking kidding me? This is .com bubble all over again. It's everything. We've got a website. Woo, pets.com. This is going to be worth so much in future. That's why scams pump. That's why pump and dumps happen. That's why bubbles form. That's why things seem great when they're going up, and then when the cold, hard light of day comes, they turn into total dog shit. Because it's the promise of future value. And humans are emotional roller coasters, and we always overestimate things both ways. We overestimate how bad it is in a bear market, and we overestimate how good it is in a bull market. So whenever Bitcoin went to 15k after FTX collapsed, everyone thought it was too expensive. No, it has to go lower. It has to go to 10, 5. I wouldn't buy it at any price. It's going literal zero. And then when you're at the peak of a bull market, it's going to be fucking, this is the greatest thing ever. 1 Bitcoin and you can live for the rest of your life and you never have to do anything. You just go on an island. You've got fucking beautiful women feeding you grapes. It's always going to go overly euphoric and overly fearful. And that's based on the promise of future value. So that doesn't just apply to AI. That applies to everything. People are currently overvaluing whatever new blockchain there is. Right? People are currently saying, oh, wait, look, maybe Ethereum's not that great. Let's overvalue this thing over here, or this modular thing, or this monolithic, or this integrated, blah, blah, blah. People are always going to do it. People overvalue NFTs. Any better example than NFTs? People overvalue metaverse land. Copy paste all the time. Attention. NFTs were everywhere. Rappers, NBA players, footballers, they all had NFT profile pictures. Attention. Promises of future value. This JPEG, look how much it's worth. It's going to be worth more in future. This is the new art. This is just like art collecting, except anyone can do it. Just buy it, bro. Buy it, bro. It's going to be worth millions later. Take that, apply it to whatever the newest, next, shiny thing is. And you'll outperform anyone with their fucking spreadsheet. And they're, yeah, but this thing only makes such and such amount of revenue and the profit and the earnings. Fuck off. It's not TradFi. It's bullshit. It's all a mirage. It's all a scam, apart from Bitcoin. Just play the game. And even in TradFi, the market divorces from reality all the time. Like, people think that TradFi is super efficient. No, it's fucking not. Everything goes way, way over and above the earnings per share and the valuation. Everything's overvalued because the base currency is fucking dog shit and they're printing more of it and it's debasing. Don't forget that too. So, 2024 plan into the trading side now. This is my spot portfolio. Long only. Goes without saying. Maintain a weighting of 80 to 90% of my total portfolio. So, the stuff I'm holding, spot bags, should be 80 or 90% of my portfolio at all times. Never go above 50% cash when Bitcoin is below all-time high. Meaning, out of the 80 to 90%, right? So let's imagine I had a total portfolio of 10k. 80% of that was in this spot portfolio. So if 8k, and I put that 8k into Bitcoin and ETH. There should never be a point at which I am more than 4k in cash whenever Bitcoin's below all-time high. Because in reality, it's back to the point I made before. The 2024 is not a year for taking profits, and everything below all-time high is a bear trap. So why would I be in cash? The reason why you have to give yourself wiggle room. There are scenarios in which it's okay for me to take on more cash. I'm still a trader at the end of the day. If I see something, if I see AKT go from $3 to $6 in a week, I am going to take some profit because that's super inefficient. It's probably going to pull back 20, 30, 40%. I'm not dumb. If I see Bitcoin go from 45 to 70 in 2 weeks in a clear blow off top, I am going to take some profit. Or let's say if it goes to 66 because it doesn't hit all-time high, to stick with my rule. I will still do that, right? So, but the main thing is never above 50% cash. Doesn't make sense. And more likely keep it far greater, far closer to 100% spot long. 25% cash when taking profit, 50% cash is max bearish. So here's what I mean. If we're below all-time high, same thing. If we're below all-time high and I want to take some profits, like Bitcoin going 45 to 60 in a week or a few days, and I think, okay, I should probably take some profit here, I would still go maximum of 75% still long spot and 25% cash. Because I'm not bearish, I'm taking profit. There's a difference. I'm taking profit because I think short term it's overextended and we probably have a decent pullback in the next few weeks. If I'm actually bearish for whatever reason, and I think there's a significant correction, I'll go as much as 50% cash. But again, if Bitcoin's below all-time high, there's no reason to go beyond that. Next one, fewer high conviction trades. Super important. Super important. But the spot portfolio, like my point earlier, I have so many narratives, all these different things, all these predictions. If you overdo it, you overthink it, you're going to overtrade it. Fewer high conviction trades. You know what? At the end of the day, if you like Arbitrum, and you like DYDX, and you like Fetch, and you like Akash, and you like XYZ, and you like 10 other coins, and you look back at the end of the year, most of them are going to move 100%, 200. They'll probably all move within a close range of each other. If you're trying to trade Arbitrum and it goes 3x, and you're also trying to trade DYDX and it goes 2.7x, and you're trying to trade Akash and it goes 3.4x in the year, right? You would have been better off to just have one of those with more conviction and trade it properly. Yes, there's always the edge case where one of them goes 50x or whatever, but that's not the rule. Your attention is limited. Now, this is the spot portfolio. I'll talk about the trading portfolio in a moment. The trading portfolio, the smaller amount, will be very rapid and frequent, a lot more trading. And I have a method for how I can trade many more things using that. My core bags will always be about 60%. So that's like, I'm holding this and that's it, right? That's Bitcoin and AKT predominantly. And then Solana or Ethereum is optional. So I can change the weighting of it if I think Solana or Ethereum is going to do better or worse, right? But the core is my majors, Bitcoin, Sol, ETH, but really Bitcoin. And then my main altcoin bag, which is AKT, which doesn't change. So that's 60% of the 80. Altcoin rotations is the other 20%. So these are altcoin rotations following the swing trading system that I have, right? Hold time generally under 4 weeks for me. That's my plan. That's my approach. Please God, do not hold me to this when you see me hold an altcoin for 5 weeks. You said you were going to hold it for 4 weeks. Please. This is the plan. Okay? The idea is, I know from trading many cycles and from fucking thousands of hours of backtesting and watching charts, that if you are actually timing altcoins correctly, they don't run. The actual impulse, the 80% of the move you care about, right? Not catching the bottom, not catching the top. The majority of the move happens usually within 30 days. It doesn't just keep trending up forever. So that's what the rotation part is, the smaller amount. That's like, I see a big narrative coming up with Arbitrum going into March 2024 because of proto-dank sharding, and I want a portion there, but only for those few weeks. Okay? That's the idea, that's the approach. That will obviously change, but that's the approach. Trading portfolio. Now, again, to remind people, I hold stuff and I trade stuff. So, trading portfolio is long and short. Well, but you said don't short. Yes, don't short. Don't short with your portfolio, with your spot bags. Don't fuck around with them. Don't become a person who is trying to catch up and down and rotate all the time if that's not your game. Now, it would be completely irrational to abandon my systems that give both longs and shorts, but they are in the trading portfolio, which is a weighting of 10 to 20% overall. And the focus will actually be on day trading, shorting over-leveraged shitcoins if there's BTC weakness. Because, remember, this is for me, and I'm an experienced trader. You can do whatever you want, but you do not have to copy me. In a bull market, I am always going to be long. So just imagine that I'm 100% long in my spot bags, in my other portfolio. And then I'm day trading. To then day trade only long, that's okay, but it's adding risk on risk. So what I would rather do is have 90% long, so this 10 to 20%, I would rather have it 90% spot long, and then with the 10% be focusing more on, okay, if we're going up and I see super high funding, rising open interest on some shitcoin that's starting to break structure, I would look for shorts following my system. Because then it acts as like a pseudo hedge for my portfolio. We'll talk about it in a second. And then swing trading, active coins, narratives. This is long only. This is like, if something pops up, like parallelized EVM, which is not one of my main theses for the cycle. I don't hold spot bags long term for this parallelized narrative, but it pops up. And I know that narratives can run for multiple days or even weeks. Then I want to trade those, swing trade, multiple days, even a couple of weeks. Right, so that's slightly different to the rotations part. The rotations part is much more structured and planned out. The active coins, you don't really know. So this is the thing. A lot of people think they know when, and here's something that will really help you all. If you research all these narratives and you're like, I want to have some exposure to gaming. I want to have some exposure to DeFi. I want to have some exposure to NFT. You shouldn't. Again, you're spreading yourself too thin, trying to go for 10 different things and holding 10% of 10 different altcoins in your bag and then waiting for them to pump. That's not how you outperform. So you have to have your core, which is what I showed before. And for me, I then trade the active coins. And guess what? I wait until they pump. I wait until people start talking about it. Because that's when it's active. And then you're trying to ride just part of it. I might ride it just for one day. All I care about is, can I enter and exit with good size and win a 2, 3, 4 hour trade? That's it. I don't care if this thing cures cancer, because it's all just hype and nonsense anyway. Day trading then as well. I'll be day trading at fixed times only based on my systems. That's more of a time management thing for me. As I said before, I'm extremely busy in my life. And so I do not have time to sit on the chart 12 hours a day day trading. I'm in the market 12, 16 hours a day working, studying, keeping on top of things, informing you guys, doing these streams. But here's a perfect example. When I do a live stream, I could be on for 2 hours. I can't day trade if I'm on a live stream. So it doesn't make sense for me to try and manage trades every minute of every day like I used to be able to. And that's totally fine. So I will trade fixed times only. And for me, they're the two opens. New York Open, Daily Open, they're the main ones. So like 2-3 hour windows around each of them. Next one, don't swing trade shorts. 1 to 3 days is where the majority of pullback is realized. This is what people miss too. If you're trying to shorten a bull market, in and out fast. Because why are you shorting in a bull market? You're shorting in a bull market because over leveraged shitcoins. If there's a shitcoin that's over leveraged and you're right, it will flush fast because it's leverage. Go back and look at any of the pullbacks we've had in the past few weeks of 2023, the last few weeks of 2023. It's fast. It's one day down because leverage is like a domino effect and they collapse. So I will not swing trade any shorts. And that means for me a swing trade is like anything more than 2 or 3 days. So if it's 4 days, a week, 2 weeks, whatever, it's okay to hold a short for 2 days. Don't be silly, right? It doesn't have to be in and out on the same day. But typically, your pullbacks, the majority of the actual move, and if you're timing it to catch the impulse sell-off when people are over leveraged on the wrong side, it's going to happen fast. And it's really good because you can get in and out quickly. And that's how you should do. If you're sitting, here's a little rule of thumb that really cost me a lot of money in my first bull. If you're sitting in a short in a bull market for too long, get out. Time matters. If you're short because of you think it's over leveraged and then 2 days later it's at the same price, you're wrong. Get out because you're probably going to get squeezed up. Next one, compound aggressively when right. That means pyramiding, adding to my positions when I'm correct. Next one, cut losers fast when wrong. Same thing. If I am not right and I'm not right fast on my trading portfolio, I get out. This is no game to be marrying your bags or saying, oh no, I suddenly believe. If I'm trading the parallelized EVM narrative because it's a hot narrative and my coin doesn't start to move for me, I am getting out. And especially if it goes down when I buy and I'm getting long, I'm getting out. That's different to Bitcoin. I'll sit through a drawdown. A cash, I'll sit through a drawdown. Right? If I've got altcoins that I have a bigger belief in for a higher time frame, I'll sit in them. But as a trader, cut losers fast when wrong. And then the idea of the shorts will act as a semi-portfolio hedge. I don't mean this is hedging. It's not hedging because it's a small percent of the portfolio. But what I do mean is it's not adding extra risk. If I'm max long spot, like I said before, and then I'm day trading a certain system that's short only, I'm not adding extra risk. So if I'm wrong and I lose that day, it means my bags have gone up. It means my spot portfolio has gone up. If I'm right and I win that day, it means my spot portfolio is probably a bit down, but I've made money on the short. So it's a semi-hedge. It's very, very small. Doesn't really matter, but this is, remember, it's a plan for me. This is just for me to look back on and remind myself. And if I'm not trading actively, hold the funds in Bitcoin. Right, so if I know I'm going to be away for a week or two, I'm not away, I'm obviously here every single day, but if I'm not going to be trading for a week or two, because I'm traveling a lot and I'm going to focus on the real world and I'm, just don't have time to focus on the market and be day trading, I'll just switch it into Bitcoin. There's no point holding cash. Put the cash to work. Next, 2024 plan for the routine. So the things I'll do every day. Follow the bull market workflow every day. You can check that lesson out, bull market workflow. That's it. That's the exact workflow I'll be following every single day. And then a few other things. So the bull market workflow covers most of it. But a couple other things. To trade less and study more. So this goes along with the plan from before. But in terms of my routine, it's going to be a lot more about the studying, which isn't just studying the charts. It's about everything encompassing from reading all the way to backtesting scenarios, all of that. Just in general, the focus on less trading is a good approach because then it makes me more disciplined to trade in my specific times. So if I'm allowed to trade the New York Open, then I really focus on that. And if I'm outside of the New York Open, then I don't trade. And it's like a weight's lifted off my shoulders. I can go off and do all the things I need to do. Journal day and night, every single day. Simple. Review the journal once a week and once a month. Now I always do this. It's just a reminder. Keep it and do it. Every week, review the journal. Every month, review the journal. And do it alongside your weekly review and your monthly plan. Backtesting sessions, twice a week, 3 hours each. Scenario analysis sessions, twice a week, 3 hours each. Both of these, I do them, but definitely one of my biggest flaws in 2023 was not having a really consistent schedule for them. So I'm literally just going to schedule them in at the same time every week and do them. And then all throughout the week, if I think of an idea I want to backtest, I just note it down. And then on that day at that time, I do it. If I think of a scenario I want to do, on that day, on that time, I do it. Scenario analysis is like backtesting, but a bit more advanced. It's covered for purple belts and beyond, which you'll see me go deep on once you get to purple belt. Finally, reading. Read more. Read every day. I already read a lot, but if you're not structured with it, if you're not disciplined with it, you can end up just kind of reading too much, right? That's a problem. Reading too little, that's a problem. It's sort of a Goldilocks thing. Because there's infinite information out there. I could go on Twitter and end up clicking on 10 links, as I'm sure you all know. You click on some link, you read some article, you read a report, you read Arthur Hayes' blog, you read the Massari report, you read this, you read that, and then you're fucking just reading yourself into oblivion and learning nothing. So reading doesn't just mean read more. If you read zero, if you never read, you need to read more. But if you read too much, like I definitely can. I can get into a habit of reading too many things because there's just infinite information out there. You have to condense it. Have a little section of your day. 1 hour is a sweet spot for me, where I go off and I read. And if I see something on Twitter or whatever, if I see something that catches my eye during the day or during the week, I'll note it down and put it on the side, but I won't read it until the right time. Then, reviews. This is what matters most. Sunday, 12 p.m. So the same time every week, I review my week and I plan my next week. End of month, which is just whatever the last day of the month is. It could be the 30th, 31st, 29th this year in February. Monthly review and next month plan. Simple. This routine should be so simple. You'll see on the bull market workflow, again, simplicity is key. Just do it the same time every single week, every single month. And it has to be the same time, because then it becomes a priority. You can push other things to the side and say, no, I don't give a fuck. What is coming at me? I am doing Sunday 12 p.m. I'm doing a weekly review, right? Now, last part is sort of a preview into the first quarter of the year. So I don't have, some people do, I don't have a Q2, Q3 and Q4 plan yet, because I don't believe in planning that far ahead, because so much is going to change. I could say, oh, Q2, the halving, Q2 this, Q2 that. That's more of a predictions thing. But for my plan, right now, Q1, January to March, here's my view. The market's already heating up, but it can get more frothy. Blow off tops. So it basically means there's an equal chance that we top very soon, or we go batshit crazy and go a lot higher. That's just, again, it's not a prediction, because I'm basically saying it might go up or might go down. I'm not predicting, I'm saying that's my view. So the plan is remain fully spot long, but don't add fresh capital. That's important. And convert all trading profits to USDT until first proper pullback. Stack non-trading income into USDT until first proper pullback. So what that means is, if I had 10 grand invested right now, right, and I was making $500 a week extra as a trader, and I was making $500 a month extra from my job, I would keep the 10 grand in and not put the 500 in, not put the 500 in until I see the pullback. So that's what it means. I'm not putting new money in. So the money I make from trading, the money I make from outside of trading, I'm not putting that in to the market until there's a proper pullback. Up until this point, I have been putting it in where appropriate. From this point on, I won't. Because even if we go higher, I do think we get a chance to buy the 100-day or 200-day moving average correction when it comes. And again, that might not be Q1. I don't know. I can't time the market perfectly. But I do think that, psychologically, we're getting to a point where more retail are coming and the later entrants, and there's a bit of exuberance and a little bit of the signs euphoria. So I just think it's better to wait until there's some kind of fear and then buy again, right? So I'm stacking cash. But that is not the same as me being bearish. I'm stacking cash, but I'm fully invested of everything I had in before. Important to note. And my view, just generally, ETF selling news, it's a distraction. Think of how much mental energy people are putting in. As I record this, it's pre-ETF, so maybe the ETF's been rejected when you watch this, or approved, who knows. But right now, first week of January, everyone is fucking hyper-focused and tying themselves up into knots and writing a million tweet threads and writing articles and doing videos. It's a distraction. It's distracting you from the bigger picture. Zoom out. If there's a sell-off, buy more bags. If it goes up, good, that's the plan. So don't let it distract you. And then finally, don't be greedy on the dips below all-time high. Get in. This is super important. If we dip 30%, don't be sidelined waiting for 10% more dip, when the upside is hundreds of percent on whatever coin you're looking at. And this is a big one. You're never going to get the perfect correction you want. Your lines on the chart are never going to play out perfectly. Your fucking technical analysis is not going to pick the bottom. Remember the bigger picture. You want to not buy the top of whatever pump it is. You want to wait for a correction, and then you want to get in. Because if we're below all-time high, everything is a bear trap. So that's my approach. And that's it. That's the plan. 2024 plan done. GM, thanks for watching. Now go and make your plan.